Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we are very pleased you have joined us for our next live presentation from Desert Mountain Energy Corp. Please note you can submit questions in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Don Mosher, President and Director of Desert Mountain Energy Corp, which trades on OTCQX Best Market under the symbol DMEHF, and also on the TSXV under the symbol DME. Welcome, Don.
Thank you very much, Eric. It's very much a pleasure to be here. Desert Mountain Energy is really focused on helium extraction. We've got two projects. We've got a project in New Mexico that was recently acquired. We closed on the transaction on the 1st of July. Prior to that, we were exploring, developing, and looking to go into production in Arizona. We did have the plant that's currently in New Mexico located in Arizona. It was set up on 8 acres of ground that we own, or actually it's a 40-acre package with 8 acres of solar panel that was going to power the plant. And when we put the plant into operation and we started to produce the wells, we had a loss in pressures, which our engineers deemed necessary to do a stimulation. And we ran into permitting issues in the state of Arizona, and we are continuing to work with regulators to try and get the necessary permits. But because of the nature of the plant being modular, we were able to pivot and move to New Mexico into a natural gas asset with a helium content into it. So really what we've done is, to the best of our knowledge, we're the first company to be able to take a helium processing facility, pick it up and move it 900 miles to a different state. Those forward-looking statements that go with all these presentations, I'll skip over that. So our main project right now is getting the West Pecos Slope Abo gas field into production in New Mexico. It was a field that was developed back in the 70s, discovered by T. Boone Pickens. We picked the project up for $2.5 million. It is 188 completed producing wells along with 50 miles of gas collection system that would probably today cost you probably $150 million to develop. The reason we got it at such a reasonable price is because it was poorly maintained. Current natural gas prices, due to the flood of non-traditional gas coming out of the shales, for example, is really put gas prices to a point where traditional fields aren't being developed and properly maintained, and we see an opportunity there. We've got a great technical team. Rob Rolfing has been looking at the helium space going back to 1998. And we were lucky to get James Hayes from ConocoPhillips. He's our VP of engineering, and he's in charge of putting the plant together right now. In March of this year, we raised 23 million Canadian on a 195 unit. And that money really allowed us to make that quick pivot when we ran into regulatory roadblocks in Arizona, and allowed us to move the plant and look at getting in a positive cash flow from our New Mexico asset. So in New Mexico, we've got 77,000 acres, 188 producing wells, 50 miles of gas collection system. We've got the El Paso transmission line running right through the property. Currently, we inherited a contract, an offtake contract from AICX, which runs out in April. And we're going to stick to the strategy that we had in Arizona. When that contract either comes to an end or if we have the ability to buy it out, we'll be negotiating end user contracts directly. So this is a vertically integrated production company that will be selling natural gas, condensate, and helium. We're hoping to be into full production middle of November is our goal right now. The the 100,000 plus acres that we have in Arizona, where we've discovered 4 helium fields and have 8 helium wells already drilled, we'll maintain in good standing, and we will continue to pursue permits in Arizona. But it could take 2 or 3 years, and that really forced us to pivot into New Mexico. We also generate revenue from a truck fleet that we own that moves heavy equipment for the oil and gas industry. And we've got a couple of drill rigs that generate some revenue for us. So currently we're about break even on G&A. And when we get gas sales happening, we expect to be into positive cash flow. And our goal is not to go back to the equity market and do any more raises. So Rob Rolfing and myself took over a management company in August of 2020. At that point in time, Rob had been VP of exploration and had drilled 2 wells, and they weren't sampled. So we took over a company trading at 65 cents Canadian with $600,000 in the bank. There was 55 million shares out. They were all issued under 35 cents Canadian. When we sampled the wells, the stock ran to $2. And we raised $13 million at 160. That is the cheapest financing we've done in the last 3 years. We've raised a total of $58 million to put this company into production, and we've built it through, obviously, COVID in 2020. We did benefit from very good markets in 2021. We just recently brought on Valerie Farley as a full-time CFO. Eric Witt is our operations manager, along with James Hayes. He's putting the plant together for us right now. Risk management with Ched Wetz, and James Cronable is our head of exploration. He's also a board member, and he's working on looking at comparisons between production profiles, well logs, looking for virgin pay zones that we can perf into in the 188 wells that we're in. Getting a better understanding for the geology there. We feel that there's also the potential to drill 70 to 80 or 70 to 100 more wells, but our focus isn't doing all the low capex work right now, reducing choke points in the system, looking at doing workovers on the wells, and really increasing gas volumes and being able to produce, process, and sell clean nat gas, condensate, and helium to end users. On the board, we've got Mike O'Shea, who is the chair of our audit committee. We're very happy to bring him on board here a couple of months ago. We're really focused on continuing to increase corporate governance. And prior to Mike, we didn't have a fully independent audit committee. Now with Mike O'Shea, Kelly Ward, and Weldon Stout, we do have full independence on the audit committee, and we will continue to seek more independence on the board as we find qualified members to bring on. The stock's been very volatile. This is a 3-year chart. So we took the company over just prior to what you see the $2 level at. Just prior to that, we did the financing. And we drilled a total of 3 wells in 2020. The first 2 wells, when they were tested, came in at +4 and +7% in nitrogen fields. There was no natural gas or no hydrocarbons in these fields in Arizona, which really excited the market. And that is why that plant was designed to go with solar. We didn't have any natural gas to burn to power the plant. In 2021, during the year of the SPACs, the IPOs, and very speculative market, the stock traded up to $4.95 on basically no news. And in February of 2021, we forced the warrants that were attached to the 160 unit financing. And that took our treasury to a total of $29.3 million. Now, probably the biggest mistake we made in 2021 was not raising another $40, $50, $60 million at above $4. But at that point in time, based on the information we had, we thought we could bring these fields into production by the end of 2022, and we wouldn't need any further funding. We were wrong about that. We ran into delays with component deliveries, delays with fabrication, and all the rest of the issues that I think every industry in every sector enjoyed, where it was tough to find people and it was tough to work your way through the supply chain bottleneck. The big correction that you see in September of 2021 was when we finally drilled our fourth well, which identified the Macaulay helium field that we were planning on bringing into production. The grade of that well was 1.137%. Now, that was compared to wells 1 and 2 at +4 and +7%. And it was very much a knee-jerk reaction. And I think there was a lot of people that were holding 20, 30 cent stock that suddenly got scared. And we saw very much increased volume all into the bid and knocked the stock all the way back to $2. And then in February, March of 2022, we drilled 3 offset wells in the Macaulay field. They all came in at 3.5%. Stock went back to $4.30. But then, like the rest of the market, we got to enjoy the global meltdown that affected every industry and every sector in the public markets. We did rebound earlier in the year to 320. That's where we started the year out. We did negotiate and close a financing at $1.95 Canadian on a $23 million unit. There's a 262-year warrant attached to that does trade on Toronto. It doesn't trade on the OTC. And currently our stock has traded all the way down to where it currently is, 35 cents Canadian. So I'm currently buying stock where I originally bought it as a simple investor in June of 2020 without 2 wells, with no wells drilled. It was simply a speculative exploration project at that point in time. Currently, we've got about $12 million in the treasury. Through that period of time, we've only issued 34 million shares to raise $58 million. We've acquired a truck fleet that generates a profit of between $200,000 and $250,000 a month in U.S. Revenue. We've got a couple of drills producing revenue. We've got a plant that's been bought and paid for. We were offered $40 million US for that plant at one point. We've got 8 acres of solar farm sitting in a secured area in the Arizona desert that was going to power the plant. It'll probably be contracted out to sell energy to an offtake in Arizona. It'll be hooked into the grid. And the battery storage that we're going to take delivery on, we've found a buyer for that. So that'll put $1.3 million back into the treasury. Now, this is our facility. Shortly after it was delivered at the end of July, as you can see, it's modular in nature. The 5 sea cans that you can see in the center of the photo are being dropped here via crane. Over the last 3 months, what we've been doing is bringing all the piping over. We very much took this apart the way one would take a log house apart if it had been constructed prior to moving it to a foundation. You number all the logs and you move them over onto the new location and put it all back together. That's what we've done with this. 95% of the piping that we had in Arizona has been delivered and welded together. All the electrical is all hooked up. Right now, we're just completing on some of the main components. Dehydration unit, the aiming unit. We're expecting to see delivery on a large compressor next week, which will allow us to pressurize the gas to sell it into the AICX line. And looking down the road, if we can look into hooking into the El Paso line to sell directly to end users, the hot tap is up in the right-hand corner where you see those two white pickup trucks. So that's how far we are off the El Paso main line. Now, this is what it looks like inside these modular units. Basically, we've taken 60, 70-year-old technology, which is pressure temperature swings, some membrane technology, incorporated into these modular units. We've also, one of the biggest things that we've done is reduce power consumption because we were looking at using solar, and we've set this plant up to operate remotely. We don't need people on site to operate this plant other than when we're loading trucks. So, our current focus has been, while we're putting the plant together, identifying choke holes, doing pig over work on the lines. The collection system hadn't been pigged since 2015. Some of the wells have not had any work done on them going back 22 years. So it's all low-cost CapEx work for us, dropping acid sticks and soap sticks down into the wells. We've got a workover rig. If we think that we need to do some workover work on some of these wells, we've got our own rig to do it. While that rig is there, we can also contract it out into other fields near us. And really, it's just going to be a complete focus on optimizing production and volumes in this field and pulling as much helium out of the raw nat gas as we can. We've got a local buyer for all the condensate, a heavy oil operator who does need the condensate for moving his heavy oil by diluting it down. So that part of the picture is all together. We've got all the necessary permits. The good thing about New Mexico is it is an oil and gas state, and they do understand what we're trying to do there. And if you do need to do stimulation work on wells, it's not the permitting process that we're going to have to work our way through in Arizona that could take 2 or 3 years to get the permits for those wells to put them into production. So in Arizona, we had all necessary permits to operate the plant, produce out of the plant, and sell helium. Where we ran into a problem was the formation that we were in, nobody's ever produced anything out of it. And when we went in there on the expectation that those wells would maintain pressure, we were disappointed to find that once we put the wells into production, the pressures dropped, and our engineers decided that we would have to do a near wellbore stimulation, which in any oil and gas state would not be a big deal, and we would have moved straight into it. In Arizona, it's been a problem. We think we'll get through it, and we will continue to work with the Arizona regulators there. This is our location in New Mexico. We're right on the north end of Roswell, and we are beside another larger field called the Solis field. We're really the only two natural gas producers left in the area, and we're both trying to sell to AICX, but we would both like to get out of that contract and move into direct sales. So you can see our project lit up in yellow. Our collection system is, I'm not even sure, pink, mauve, whatever color that is, are the lines. And that black line is the El Paso main line running right through our property. The Pecos Slope Abo field off on the right-hand side, you can see, is a much larger field with quite a few additional wells. I think there were like 1,500 wells to our 188. So we'll look at doing additional drilling maybe a year or two out, but for now, we've got our hands full with really doing the necessary maintenance work and really trying to achieve maximum volumes out of the producing wells that we currently have in place. The Arizona fields, as I stated, they're nitrogen fields. There was no natural gas there. What attracted us to Arizona was back in the mid-60s, there was a field called Pintadome that was discovered to the north of our leases. and it produced between 63 and 1975. And the highest helium grades ever discovered were discovered in that field in 2 auxiliary fields. They were producing at helium at 6 to 11%. But they were using natural gas that they'd contracted out of a gas line that passed near them. And in the mid-70s, when the contract ran out, because helium was only trading at a price of about $6.50 an MCF, the economics no longer made sense, and they shut that field down. It's interesting to look back at 650 helium, because back then the helium was basically used for lifting gas, welding, deep sea diving, and some of the space program, which really slowed down in the mid-70s. Pintadome was supplying helium to the Apollo program. But it wasn't until about 20 years ago that helium really came into vogue with more high-tech applications. And I'll touch on some of the unique characteristics of helium, but compared to 650 an MCF crude helium back in the mid-70s, crude helium now is worth $600 to $800 an MCF. While at the same time, I believe natural gas was probably selling $10 to $15 back then, natural gas is now selling $2.50 to $3. And that is really what has impacted the pricing on the helium, is the lack of development going into natural gas fields. And we'd always had an idea of, once we put these fields in Arizona into production, to pivot into looking for acquisitions in the natural gas arena, because 98% of all helium comes out of natural gas fields, just at much less grades than what we found in Arizona. Our average grade in Arizona was running about 3%. And we were going to put the McCauley field initially into production with 4 wells. We had 1 well in the Rolfing helium field that we were going to truck up because it was compatible with the plant. And we'd also drilled a well in Gunner Dome that we were going to haul over to the McCauley field. So you're only dealing with maybe moving gas 30, 35 miles by truck to be able to use that one plant to service the limited number of wells we had elsewhere. Up in the right-hand corner, you can see where the Pintadome was and the 2 auxiliary fields. We had good infrastructure because we do run right off the highway that runs through there. And we had drilled a well up in Meteor Crater that to date we haven't sampled due to some issues that we've had in Arizona. We're still working through those. This year we had planned on drilling a couple of more wildcats. We had also found hydrogen fields within our McCauley helium fields that we were looking to do development work on, along in association with a company called Beam Earth. They're out of France. They're a private company, and their real focus is hydrogen. So we thought we'd bring their expertise and do a joint venture with them on developing our hydrogen fields. The plant had the engineering capabilities to actually process the hydrogen, but that 3-well program that we planned this year ran into some difficulties because Beam Earth has had trouble financing. I think there's a lot of speculative issues out there that are having trouble raising money. And if you're a private company like Beam Earth, it makes it that much more difficult. So in summary, as far as what the company's doing, our total focus is currently in New Mexico. We're looking at the possibility of drilling some new wells in the future. And we're looking to sell all our products on a vertically integrated basis. I'm going to stay away from revenue projections and not wanting to make up numbers. We want to get this field into production. We want to see how we can increase our volumes. As we start to produce sales, we'll start to put revenue projections together. But we think initiating production in New Mexico is going to allow us to start to put money into the treasury as opposed to depleting the treasury, which is what would have happened to us if we hadn't pivoted into New Mexico and had stayed in Arizona trying to get those permits in place. A little bit on what helium is, because a lot of people aren't familiar with this valuable gas. It's completely inert. 98% of all matter in the universe is made up of helium and hydrogen. The difference between the two of them is hydrogen will marry pretty much any other element out there and produce water, for example, whereas helium won't marry any other element out there. It is completely inert. So one of the things it's used for is if you want a contaminant-free environment for manufacturing fiber optics, you purge it with helium. If you want to cool a data center or an MRI, you use helium because it's got a boiling point of negative 452 degrees Fahrenheit. So if you want to achieve near absolute zero temperatures, you go to helium. Now, helium is very rare because it wants to leave the atmosphere. That's why it's used for lifting gas. And as it's created in the Earth's crust, if it doesn't find a trap, it simply leaves the atmosphere. So although it is being generated in the Earth's crust, it's found in very few places. Most of it's in association with natural gas. And as a result of the lack of development money going into natural gas fields, we've seen a drop in helium production while we've seen an increase in helium demands. The federal government decided to get out of the helium business in 2018, and they've auctioned off most of the helium in the federal helium reserve, and that has also contributed to the rise in the price of helium. Depending on the grade of helium, which is graded on a 9 schedule, 99.99 would be called 4.9 helium. 99.9999 and a 5, which is chip grade helium, is a 6.9 and a 5 helium, and it'll sell for up to $6,000 an MCF. If you liquefy the helium, the prices go up again. And companies like Taiwan Semiconductor, building a $41 billion facility in Phoenix, can't operate without helium. The Russian crisis has contributed to this. Russia was bringing on the Amir complex in February of 2021. It was a natural gas facility. And when they turned that facility on, it caught fire and blew up. That was supposed to contribute 25% of global production or demand. And suddenly that came off the table along with the federal government in the US getting out of helium. The US is still one of the largest producers of helium, along with Qatar. Russia would very much like to ramp up their helium production, but I think they're going to have trouble acquiring the necessary components and expertise to do it due to the Ukrainian crisis. You can see the drop off of domestic production while the helium consumption increases here. This, I think, is very telling on why we're not seeing development money going into the natural gas space. When you take a look at from gas wells, back in 2017, it was 6.1 billion cubic feet per year. The year before that, it was 7.8. It's not increased over the last 5 years, but if you take a look at from just shale gas wells, it's jumped from just about 20 BCF up to 30 BCF. That flood of gas does not allow development money to justify more development of natural gas fields. In fact, the pricing in the natural gas arena has not even allowed the producers to put the necessary maintenance into their fields to maintain the production and all the rest of the infrastructure necessary to squeeze the helium out of there. Most of the natural gas wells are sold as raw gas on an offtake, and the producers don't even get paid for the helium. The end user or the end buyer on that is taking that raw gas, and they're basically pulling the inerts out of there without paying for them and selling them directly to end users as processed gas. So we don't see the price of helium dropping. We see the demand increasing, and we don't see any near-term solutions to this problem. And that pretty much wraps it up. My contact information's on here. If you need any more information, please reach out to me. Rob's pretty busy with setting up the facility. And I'll just touch on a couple of questions I've got here. The Arizona plants, somebody asked when the Arizona plant will be operational and producing natural gas and helium. It was never going to produce natural gas. It was going to vent off nitrogen and produce nothing but helium, and it's been moved. There is a compressor arriving early next week, which will allow us to achieve the pressures necessary to feed gas into the IACX line and ultimately into the El Paso line. So that's where we're at right now, is the last few components showing up there in regards to being able to dry the gas, the aiming unit, compressors, etc.